Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin and we're going to be discussing the social risk. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. We've actually spoken quite a bit about various risk metrics, including the social risk. The social risk has actually turned into one of my favorite ones because it really does give us a glimpse into overall sentiment at any given time. Now, the social risk is made up of 5 different components. So, we're going to go through each one systematically so that we can better understand what the social risk is ultimately telling us. The social risk consists of YouTube subscribers to popular cryptocurrency YouTube channels. So, we're talking about new subscribers. By the way, new subscribers to my channel has basically flatlined, just to give you an idea. But we'll look at it a little bit closer here in a few minutes. We're also looking at YouTube views to popular cryptocurrency YouTube channels, followers to cryptocurrency analysts on Twitter, new followers to cryptocurrency exchanges on Twitter, and followers to cryptocurrency layer ones on Twitter. So we're looking at the delta. We want to know, like, are there new people coming into the space or are there not new people coming into the space? And this can give us a better idea as to, where are we generally with sentiment? Has it fully reset? Has it not? And where are we? Where do we stand today in the context of where we've previously been? So so you can see what the social risk metric looks like. Now, just take a snapshot of this in your head, think about it. We're going to come back to this in a few minutes after we fully understand what is going on or what goes into the social risk. So one of them is YouTube subscribers to cryptocurrency YouTube channels. And this is what it looks like. Okay, you can see down here which cryptocurrency channels that we're tracking. And this is essentially, tracking all these new subscribers, right, to these cryptocurrency YouTube channels. And you really can see how we had a lot of new people come in during this first peak. We had some new people subscribe in the second peak, but the first peak was a bit more spectacular in terms of just seeing an influx of new people. But since then, we've really just been in a bear market. And this is a 7-day estimate of it. If we just looked at our, not a moving average, it looks something like this. You might wonder, why do we see these spikes to the upside and the downside? There are some channels that have over 1 million subscribers. Mine's not one of them. I'm not that popular, but there are some that have over 1 million, and the denomination that's tracked in is only by 10,000. So you won't see any activity on those channels for a while, and then all of a sudden there'll be a lot of activity and it'll go up 10,000 subscribers or something. So that's why you see some of these spikes. But to sort of smooth that out, you can take a moving average of it. You can take like a 30-day SMA, and you can really see just how, just kind of where we are in terms of social sentiment, like new subscribers to YouTube channels. And you can see that it's mostly dried up, right? There's not a whole lot of new people coming in right now. And in fact, if you were to look, I mean, essentially it's a ghost town, right? If we're being completely honest, right? It's a ghost town in terms of new YouTube subscribers. Now, another thing we can look at are YouTube views. So YouTube views are interesting because they haven't dropped nearly as much as some of the other statistics, although they are finally starting to fall off a cliff. And I want to talk about this. I will sort of bring it back because I know things can seem somewhat dreadful sometimes, but we'll talk about that later in the video. You can see that it's really falling off here. Okay, so this is something I've been monitoring quite closely, and you can see that YouTube views has mostly been going sideways for a while. It popped up during some of the drama back in November, but now it's really starting to fall off very, very quickly. Okay, so keep that chart in the back of your mind. If you're curious as to what it looks like just for my channel, this is what it looks like. So this is what it looks like for my channel, and yeah. So one of the reasons there's a spike here is because I was, we were talking about seeing a summer lull come, and then when it came to fruition, I think I saw like an influx of subscribers, and then so that sort of marked the top in terms of new YouTube views on my channel. But That's what it looks like for my channel. So we also can break this down into Twitter things. So we have Twitter followers to various Twitter analysts that focus on cryptocurrency. This is what it looks like. Again, it's a pretty brutal bear market out there. Followers to exchanges. Again, it's just been going into, we've been trending lower for a long time. And then to layer ones, right? Similar types of things. And these spikes that you see are caused by, some of the major events that we've had, like the Luna collapse, the FTX collapse. And when some of that stuff happens, you'll see a lot of people come into the space just to sort of, because it's hard to not want, it's hard for people not to watch a train wreck, I think. And so you'll see a temporary surge in new followers to a lot of different accounts. And then sometimes those new followers will leave pretty quickly. So those are the 5 components that go into the social risk, okay? Now, going back to the social risk, you might say, well, how do you get this? Well, you combine all of them, okay? So let's do that. So this is what it looks like for the YouTube subs risk, okay? So we're accounting for, we are accounting for growing adoption in this risk metric. So you might say, well, why should we assume it has to go back to the same level every single bear market? Well, we're not assuming that. We're actually assuming that the base increases, but you can see that YouTube subs has gotten pretty low in terms of where it is on the risk metric. Twitter analysts, followers to Twitter analysts has also gotten pretty low. But what hasn't is YouTube views, but it's finally falling off a cliff. And this is something I've been watching so closely, and I've been really scratching my head about it for a long time. Why is this staying so much more elevated than some of the other risk metrics? And arguably, I think it's because a lot of people consume their content via videos on YouTube, and it's sort of one of the last things to fall. But you can see that it's moving down pretty quickly. I mean, the risk on YouTube views was at 0.532 not too long ago, and now it's all the way down at 0.307. I mean, it's been moving down extremely quickly, okay? You also have Twitter, the followers to Twitter exchanges in a downtrend, and then layer ones, again, in a downtrend. When you combine all of them, this is what it looks like, okay? Now remember, it accounts for growing adoption from one cycle to another. So even if we go to the 0 to 0.1 risk band, it doesn't mean that we're going to the same level of like baseline activity that we had in 2018 or 2019. It still is assuming we have increased adoption even to go to that lower risk level. The one thing, when we think about 2019 and we think about 2023, and I know there are a lot of people are comparing the move in 2023 to the move in 2019 and hoping for a much more sustained rally up to much higher prices. But if you were to look at the social risk, the main difference between this move over here and then this one is that when we were going up over here, the social risk had already sort of bottomed down here, and it was slowly trending back up. So we had to move higher, and people came back to the table, right? They were interested. What's different now with this pump is that it pumped, but even a 60% pump could not get people to come back to the table. Like, people just don't seem to really care, is the honest truth. And I think to myself, like, if a 60% pump by Bitcoin is not going to bring people back, then it just seems like it's going to be a fairly apathetic year, right? We've talked about this many, many times, is that 2023 is likely going to be somewhat like this. And that just because you get a pump at the beginning part of the year doesn't mean you're not going to come back down and sort of grind it out at some lower prices. So when I look at this chart, I say, well, yes, there's some similarities cyclically between 2023 and 2019, but social sentiment has not it doesn't really look like it's reset like it did back over here in 2018, 2019. Now, one of the reasons for that could be due to things that are outside of crypto's control. One thing that I think is causing a huge impact, a couple things. First of all, you have the money supply. So if we were to go look at the money supply, it's actually going down. And this is not something that was occurring back in 2019, right? We were still seeing the expansion of the money supply back over here in 2019. So now it's going down, though. So that's arguably not a good thing. You might say, well, why does that really matter? The one thing I think when you think about the money supply and why it's important, if you were to take a look at, say, let's say like the S&P divided by, let's say, M1, and you were to just kind of see what that looks like over a very long period of time. And actually, they actually changed the definition of it over here. So it maybe we should actually look at it in terms of M2 and not M1. But if you look at the S&P divided by M2, I mean, it hasn't really moved in a long time. I mean, we were at these same levels, you know, in 1997. Okay, so there's some element of if the money supply goes up, then asset prices will go up. If the money supply goes down, then asset prices go down. And it's like, is it really? I think sometimes people struggle with like, is it really that simple? Well, we've talked about it before, right? If we're seeing the money sort of dry up, and we're seeing liquidity dry up, and we're seeing a really hawkish Fed, then yes, I mean it could sometimes be as simple as that, and that you have to consider that it's not worth fighting the Fed. And this is why I just continue to sort of reiterate the same points on the channel. It's not that I want to be a broken record. It's just that I want people to recognize that there is a risk involved, right? And that risk, namely, is that you're fighting the Fed, which has not usually been a great thing to do over long periods of time. Of course, you can get short-term rallies, right? You can see short-term rallies. You can always get them. We could have them at any time. No one really knows when they're going to occur, but of course they can occur. And it doesn't necessarily mean that the liquidity has been fully drained. But when you look at it, when you denominate out the S&P divided by the money supply, you can see that it's been going sideways for so long. So then when you think about the money supply and the fact that it's going down, this could have some effect. I mean, this certainly could have some effect on social sentiment. I mean, we're just seeing a very hawkish Federal Reserve, and they are doing their best to sort of drain liquidity from the system, right? We talked about this analogy before, right? The Fed is draining the water from the pool, and it doesn't mean that we can't all stand around the pool with cups of water, right? Liquidity. And if enough of us throw in our liquidity at the same time, then the water level of the pool can temporarily go up, but it doesn't mean that the water's still not draining from the pool because the Fed unplugged the drain, right? Or the drain's unplugged at the bottom. So liquidity's still draining, even if we throw enough water in to temporarily cause it for the water level to rise up, doesn't mean it's still not draining. So that's one potential reason. The other potential reason is just because of all the events that have happened in crypto, over the last year. I mean, it was just one domino after another. So I do imagine that is taking a toll. So I would say that, seeing the social risk come down like this is certainly eye-opening in terms of where we are in the context of the cycle, right? Because the social risk would say that it has not yet bottomed, right? Like the social risk has not yet bottomed. What's interesting is that when you look at the social risk back in 2018, when we were at this level, Bitcoin was more or less going sideways at 6K. And then you can see that the social risk, when it hit about 0.128, that was when Bitcoin actually had its final drop. So right now the social risk is still slowly dropping, but it hasn't really hit those lower levels just yet. Another reason that you might not have seen it fully reset yet is because people have been watching the Cryptoverse like a hawk, right? You think about what happened back in June. A lot of people called it the bottom. Everyone's celebrating, right? It wasn't the bottom. And then you have November, and a lot of people are calling that the bottom. And there's still potential reasons to be concerned about that, especially if we go into a recession later this year, which is a possibility. Even if people are not willing to admit it, it doesn't mean that it has to happen, but it certainly is a risk. And if you look at the history of recessions, they're normally caused by an overly aggressive Federal Reserve. And right now we have an overly aggressive Federal Reserve because of high inflation. Okay, so there's a reason that they're being aggressive. There's a reason that they're being much more aggressive than they normally are. And therefore, there is a risk, right? There's a risk that we go into a recession. And so one potential reason that the social risk has not yet fully reset is because you did not see that complete wipeout where the market dropped like 50, 60%, over the span of a week or two. We've sort of had some drops, but they've all been somewhat tempered in what they've done, at least within the context of history. Okay, so you saw this drop, right, where it really flushed people out. This one certainly flushed some people out, but was it really enough to reset the social risk? It wasn't, right? I mean, the social risk actually went up because everyone wanted to tune in and see. And this is what we said before, right? Like markets don't tend to bottom when everyone's watching it; they bottom on apathy. Um, so the other thing I think to look at is if you color code this over Ethereum's price. And we've talked about this a few times before, and maybe it's worth taking a moving average to sort of clean it up a little bit. But you can see where the social risk is right now in terms of color coding it. I mean, it's a 30-day SMA puts the social risk at 0.215 or so. So we still haven't really gone down to the depths of where we know the social risk could go sort of at the very end with regards to Ethereum. And I've been very open and honest about my opinion on Ethereum for a long time. I don't think I don't think it's over, right? I could easily foresee Ethereum going to much lower prices before we're ultimately out of this mess. So again, not necessarily a popular view, but it is a view nevertheless. The other thing that I was, with regards to the social risk is that if you go back and look at the raw value, so if you look at the 30-day SMA, the 30-day SMA is currently at around 0.216 risk. Okay, 0.215, I guess. And so last time Ethereum was at around this risk level was back in, at least coming down, right? The last time the social risk got this risk level corresponded to Ethereum sort of in this range right here. So I would argue that there still are reasons to be cautious. One of the series that we've talked about recently, quite a bit in fact, and we've covered it, extensively, is comparing, this bear market with the .com crash. And, just to remind you, the NASDAQ was ultimately rejected off of the 50-week SMA, right? We sort of had a pump up to it. We came back down, a secondary pump, but we ultimately got rejected. And then from there, we bled from January until October. So if you take a look at Bitcoin here, this is potentially just the same thing. I mean, it's likely not going to play out the exact same way. Nothing ever does, but it's not that dissimilar, right? We came up to this, first in January. So here it was December, the first move up, and then we tagged the 50-week in January. So December and then January. For Bitcoin, it was January and then February. So I think you have to be at least somewhat aware that if the recession risk it does play out, which given where we are right now with Fed policy, there's not. If you look around at all the different metrics, like there's no clear indication that we're in a recession right now, but we run the risk of inflation reaccelerating, as we've talked about, and the Fed going higher than they probably should in terms of raising interest rates and ultimately sending us into that recession. So that's what this is one of the main things that I'm currently watching right now. Is Bitcoin simply just going to play out in the same way and just slowly bleed for a long time? It's a possibility, right? And I know it's not necessarily a popular possibility, but it's one you should consider. I don't necessarily imagine that everyone over here considered it, but remember, this came off of a 60% rally to the 50-week back with the NASDAQ. There were a lot of similarities we talked about, right? 77% move to the downside, a 60% rally to the 50-week, followed by the final plunge, a 53% drop from there. Okay, and then again with Bitcoin, we're basically looking at the same thing here. And by the way, we also had a recession back then too. We have a 77% drop. We get that 60% rally into the 50-week. So the only question is, well, is it going to ultimately play out the same way? And if it did, and we had a 53% drop from sort of this level here, then it would put Bitcoin all the way at around $12,000. So, and maybe actually slightly less, maybe like 11.5 or so. So I think we need to be aware of this, okay? and do that with what you will. I mean, I think the main thing that I look at right now is the continued deterioration of the social risk, which was not happening during the pump in 2019. I mean, there's a clear distinction here, right? Like, people were coming back to the table and getting excited again during this rally. Here, that's not occurring. In fact, maybe we'll call this social divergence, right? Price going up, social interest going down. So, right, you would think something's got to give, right? Like, either people need to come back to support the rally to sustain it, or if they don't, then it means the price has to come back down to go back to levels that sort of reflect actual interest in the cryptoverse at this stage. Now, I know this seems somewhat doom and gloom, and I've gotten that feedback a lot for the last 15 months or so. But one thing to consider with the NASDAQ is that if it does play out, I mean, you can still see what ultimately came after it. And this is ultimately the vision that I would have for the cryptoverse, right? Like, assuming this plays out, you still have this to look forward to. And so I know maybe it might seem like I'm sort of rooting for the prices to go down, but it's more so just trying to sort of figure out what's actually happening and how can I plan for that, right? Because you might look at a chart like this and say, you might look at this and just think of how bad it was, okay? Or you might look at this and say, wow, look at that opportunity, right? I mean, like, these opportunities don't come around that often. And when they do, it can create generational wealth, right? It certainly can. And so that's the argument, right? Is that in order to create generational wealth, one of the main ways to do it is to take advantage of moves like this. And there still is a chance that crypto is going to play out in the same way. And it's nothing against crypto, right? It's just a painful process, right? It's like a painful process that we go through to get to the next level. And I mean, I do think the next level will come for crypto eventually. But I mean, I would argue that this year is likely going to be still a somewhat painful year because we're still fighting the Fed. I mean, the crypto is still fighting the Fed, and normally the Fed wins, right? I mean, normally the Fed ultimately has the last say, and it's until they pivot. So then you'll see markets pivot as well. So this is what I'm looking at. The social risk, I think, is an interesting way to measure, where we are. And so you can still see it's dropping quite quickly, just like it was back in September of 2018, right? So something to consider. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up. I'll see you guys next time. Bye.